Hello, everyone. Thanks for coming to the transition from TradFi to DeFi. My name is Sam Abbassi. I'm founder and CEO of Hoseki, digital asset verification platform. We work with ETF issuers and organizations on proof of reserves, as well as data for lending products. Let's go ahead and just go down the line. And
yeah, so my name is Christian Lawrence. I work at Rabobank in New York as a cross-asset strategist, so looking at macroeconomic and market structure trends to develop trading strategies. Rabobank is a large European bank based out of the Netherlands, but I'm here because I've been involved in Bitcoin since around about 2013. And it's kind of been interesting being here today because I first spoke at a Bitcoin conference back in 2014, and it's a slightly different event now, I have to say.
Hunter Albright from Salt Lending, excited to be here. We really help people create variable liquidity out of their Bitcoin assets and really help manage how they think about managing their assets to live their lives, to fund their businesses. Excited to be here. We sort of see the transition from TradFi to DeFi as this spectrum, and excited to be a part of helping make that transition and help educate people along the way.
I'm Brian Mahoney. I'm the VP of Business Development at Thesis. We are a Bitcoin venture studio that's been around for 10 years. We've launched companies like Fold, which is a Bitcoin rewards platform, which just announced some big news this week. They're going live on the NASDAQ later at the end of the year. We have another company called Mezzo, which is a Bitcoin L2 that's been building in the space, and a Bitcoin staking platform called Acre. So we really we sort of have this Bitcoin stack that we've evolved over the time of 10 years, and we're very excited about what we see here today and the Bitcoin renaissance that's unlocking.
Yeah, I'd love to get to the Bitcoin renaissance later on. You all have your different specialties in the space, so I'd love to hear from each of you really what DeFi means and how it differs fundamentally from TradFi. We can start with you, Christian.
Sure. Well, I mean, I think there's some obvious spaces where DeFi is going to develop very quickly. You have around 1.5 billion people on this planet that don't have access to TradFi. So for them, it's an obvious access point to be able to take control of their finances. I think when we're talking about sort of TradFi to DeFi, the difficulty in very deep developed markets like the US is, well, TradFi benefits from being an intermediary business. That's how banks make money. So it's kind of incentivized to not move to that kind of DeFi type platform. But of course, you know, a lot of people want to have control of their own money and don't want to go through the traditional banking system. Now, I think, you know, when we're looking at what banks will do going forward in terms of developing somewhat of a DeFi basis, I think it's more about taking some of those technologies and ending up with a lot of hybrid positions, essentially. You know, at Rabobank, we just finished a pilot issuing 2 billion of commercial paper, so unsecured promissory notes on the blockchain. But this was a blockchain in cahoots with the SWIFT system. So it's that hybrid model. When regulation rules and compliance is king, it's very difficult for traditional banks to move away from that. So I think it's more of a parallel development in the near term.
Amazing. Hunter?
Yeah, I look at it, as I mentioned, it's a transition from the spectrum from TradFi to DeFi. Agree with there'll be a spectrum of people that will want to play on it and they'll want to do it, be really independent in terms of how they're managing their assets and participating. But also, I think, and it was talked about yesterday, right, there'll be a big spectrum of custody management, which I think is a big play in the transition from really traditional banking, which is full custody with the institution. And as people become more comfortable with the management of the assets, then they'll start to move to more elements of DeFi. And it might not be DeFi on everything they do within the banking, but in selected areas. So with Salt, with a lot of our customers, you know, we have a great customer service team and their ability to help people with the transactions, help people with the decisions. And I think that's a huge service that actually more companies need to be participating in, both from a comfort, an education, and a trust perspective within it as people make their own journey to whatever level of DeFi that they want to get to.
Brian?
Yeah, DeFi, decentralized finance, right? Which means really the way I think about it is on-chain capital, meaning, and I think Coinbase has been using this term, on-chain is the new online, right? So increasingly, the world is more digitized. It only makes sense that our money is too. Of course, that's why we're all here celebrating Bitcoin. You have a number of different, you know, natively issued assets, and as these assets get issued, right, people naturally want to grow their wealth, right? So you have sort of the 3 pillars of yield, which are being sort of reinvented, or, you know, history rhymes, certainly not repeats, but you have new mechanisms that are being launched on chain and doing it through novel mechanisms like smart contracts that automate, which reduce costs, increase the transparency, and mitigate risks ultimately of what we faced of past market cycles, more visibility into the capital flows, right, in an interconnected world. So what we're building, and we sort of see the next evolution of DeFi actually is Bitcoin DeFi. And we have a Bitcoin L2 that's very focused on this as a category called Meso. And we see a major opportunity here to have Bitcoin. I mean, Bitcoin itself is pristine collateral, right? So one of the ways that we're thinking about it is, how do you unlock use cases with Bitcoin as an underlying asset and doing it in a way that's true to Bitcoin, fully open source, community run, and accessible to anyone in the world, fully democratic in essence. So you got to start with, a risk-free rate, right, which is where come from the protocol layer, and that's where we're spending a lot of our time is, how do you build sort of that yield stack without introducing credit risk? And one of the most exciting areas that I'm paying attention to is with this sort of proof-of-stake network. There's about 100 plus Bitcoin L2s that are coming to market over the next 6 to 12 months. And this is an area that we're paying very close attention to and building on ourselves.
And to pull on this thread of that hybrid model you were talking about, do you think that's an interim solution, or will there always be sort of this hybrid collaboration?
Well, the Fed is a very big and powerful entity with a lot of control. And quite frankly, the idea that traditional banking will completely disappear, I think, is very unlikely in the foreseeable future. So it is more about this hybrid system for a considerable amount of time. Now, there'll be interplay between the two. As I mentioned, a lot of technologies from the blockchain world will be adopted. And we're already seeing a much growing interest in the political realm to perhaps provide more backing, more stability around fiat coins using Bitcoin in particular. There is a general broad debasement of all fiat currencies globally. People have heard a lot of people over the last couple of days talking about the dollar going to zero. Well, the dollar is still the most dominant currency in the world. If you're in any other country, the chances are your currency is weakening a lot more versus the US dollar. So the deeply entrenched dollar system globally isn't just going to disappear overnight, and that means that TradFi is not going to disappear overnight. But DeFi can certainly step in areas where perhaps TradFi doesn't particularly want to operate or hasn't been operating. So when you think about things like market making, is DeFi going to take over equities and bonds? Probably not anytime soon due to liquidity and slippage issues. But is it going to play a role in more illiquid assets, things like frontier markets, private markets? Certainly. And this sort of hybrid model of TradFi developing a little bit more will actually help the DeFi world develop as well, I think. But it is going to be this hybrid model, I think, for the foreseeable future.
Yeah, I would agree with that. And to build on that, I think there's two areas for us that we see really transitioning. One is around custody, and the other one is around asset management. So I think it's a change from traditional banking, which is really credit-focused, and helping people understand, one, how to manage their own assets, how they can think about that from a personal wealth position, which is really different. So that's a real educational focus for people to understand what they can do, how they can think about it. They need some support along the way, which hopefully then will enable them to move closer to DeFi, potentially with products that have multi-sig and have an advisor. So we sort of, there's a spectrum that moves along, and then also with the sort of just as they think about diversifying their portfolio, they can do more with their assets. They can maybe borrow against it. Then they start to figure out how to save against it and earn yield, and then even leverage it for investment purposes. So hopefully there's an ecosystem that companies are coming along and they're providing all that functionality to help people on the journey as they want to get to self-custody, want to get to true DeFi along the way, but without the transactional risks themselves if they don't have the technical sophistication to do it.
So tell us more about the adoption barriers, because we were speaking about this earlier, where people are willing to take financial risk but not technical risk. Can you expand on that?
Yeah, so we have a lot of people just don't know how to manage their keys, and they don't know how to have confidence in making the transactions. And so a lot of our customers at Salt, they trust us with their assets, they trust us with their sort of wealth at that point to help them facilitate those transactions, to get the liquidity, to get some of the yield on it. And so they are more comfortable with the third-party risk, with Salt, Unchained, with Ledden. I mean, we need more companies that are in the space that are helping build the credibility given the events of 2022. And I think that benefits everybody. Mauricio was talking earlier about the pie getting bigger, and I completely think that as the value of Bitcoin goes up, as the market goes up, as the awareness and the interest goes up, that all of us learning how to manage our assets as a pool of assets to leverage for financial flexibility is really important. And it's a really different place than where we have been in the past, teaching people about credit cards, teaching people about mortgages, and teaching people about sort of other sort of credit tools to sort of manage their cash flows with, right? We're shifting to something that is completely asset-backed, which I think is good for the ecosystem and good for the economy in terms of the implications.
Amazing. And do you think, Hunter, Christian, do you think the educational aspect is sort of like a blocker at this point in our adoption cycle?
Without a shadow of a doubt. I mean, I think most people who have been involved in either Bitcoin or crypto, at some point you've made a mistake and lost something. And that's a hard pill to swallow. Everyone, I would presume the vast majority of people here are probably very keen on having self-custody and being in charge of their own funds. But there's a significant number of people out there who do want their funds to be insured by the government. They do want the safety of a third party. So I think that it's to move away from that, you need to be comfortable. And to be comfortable, you need to understand. And that is all about education. I'd actually argue that that's probably the most important thing. If everyone really understood how these things worked, they'd be a lot more comfortable going down the DeFi route. But until that time comes, they'll still want that safety net.
And what's that look like? Is it blog posts? Is it just conversations with potential clients? What's the educational aspect like tangibly look like?
I want to jump in. I think traditionally there's been a trade-off, in the past few cycles between decentralization and open source versus user experience. And I've been in the space since 2015 building at the intersection of what was back known as open finance. It's been called different things, the tokenization of assets. Now we're in the DeFi stage, into the Bitcoin FI stage. I think the first time ever, this is my first cycle where I have not seen really a centralized type of yield operator get funded, the new BlockFis, right? There's no players like that really kind of coming into the market that are offering sort of this black box credit model. People are waking up to the inherent risks of these black box strategies, right? And I think what Salt has done, their OG player in the space, right? Been a long time doing great things for the space, but I think increasingly moving on chain is the world and the direction. And TradFi, we talk about this spectrum of the transition to TradFi to DeFi or Bitcoin FI. In my perspective, really what's happening is just the digitization of capital markets, right? There's a few industries that have not been fully disrupted by the internet yet. Traditional finance is in the midst of it right now, and you're seeing this evolution happen. It's really been a kind of an 8-year thing, starting back kind of with the ICOs. I mean, Bitcoin started, but really the ICO and Ethereum was when you unlocked sort of this general purpose use case, and people got very excited about putting their capital to work, yield farming, all this fun stuff, because you can create all these novel yield strategies and create the online casino, and that's how they get the users in, right? But of course, lots of experimentation, lots of losses, and mistakes made along the way. But that's iteration, right? That's the classic startup model: fail fast, Silicon Valley, right? And we're iterating at hyper speed right now. And now it's come full circle back to Bitcoin, right? And the programmability is being enabled at Bitcoin. We have this watershed moment here with ordinals and Bitcoin NFTs. The Bitcoin ETF is here. And you have this evolution happening here real time where there's a boomerang of capital coming back to the space and originally in Bitcoin and developer talent, which personally for me has it very excited on really what I see as the next kind of evolution of DeFi into Bitcoin FI and being the leader going forward.
What do you all think are the main challenges as we make this transition? Are there security implications, maybe regulatory uncertainty? What are the biggest blockers at the moment?
Yeah, I mean, for the regulatory uncertainty is a challenge, right? We have, from SALT, especially within the U.S., we invest a lot in licenses going from state to state to sort of do that on an individual and a business perspective. And that is a cost that causes us to have to increase rates. So getting that clarified, getting that simplified will be a huge help. And then there was an earlier panel that was talking about, if we can increase the regulatory clarity, we'll increase the amount of institutional capital will come in, which will then further decrease our cost of funds and be able to lend more. And we, at SALT, we bring in customers' collateral, but we do not then trade it for a profit or try to make any other money out of it. So we want to be really sound, really boring, really basic in terms of providing sound lending services to people to provide that liquidity. And I think the more we can do that and the more the costs of sort of having that type of business get reduced, then that will benefit any asset owner, any Bitcoin owner that wants to get the flexibility out of their assets as they go forward.
Yeah, I think for me, regulatory clarity is coming. Just a matter of when, not if. And I think that, will continue to be a major unlock. I mean, the Bitcoin ETF, ETH ETF, right? This is happening. Sure, that's not on chain, but it's definitely flow of funds and driving more mainstream sentiment to these top assets. Really, where I see one of the major gaps and challenges of this sort of evolution of DeFi adoption globally is the user experience side. We need more retail-focused products that cater to the mainstream user. I mean, it should be as easy as downloading just like you set up a Gmail account or an app on your phone, right? You can set up an account with your crypto asset. And we are getting there very quickly, but really the key thing there is, converging that on-chain capital side with the consumer experience side. So this convergence of CeFi, DeFi effectively, and having a full stack account that you can, use, and you can trust a third party if you want to manage your capital on chain, but at least it's fully visible for you there at all times. And there's no sort of black box, IOU component in your account. You have that variability throughout the entire process. And that's what I think people want. They want the freedom to control their assets and see their assets. And they might pay a third party to manage them for them, right? But that still can be on chain. You don't have to make trade-offs necessarily for that.
And regulation follows demand, right? The more mainstream it becomes. You mentioned the Bitcoin ETF. That's a huge watershed moment in bringing something to the masses that then they will then look at the underlying technology and think, well, actually, I don't want the ETF. I actually want the physical Bitcoin. But that takes time. And it's not just about educating consumers, it's also about educating the regulatory authorities. Regulators only care when something becomes big. The fact that we're talking about Bitcoin on the political circuit this year is another huge watershed moment that means better regulatory clarification is going to be coming. It has to be coming. So I do really think that this year in particular, it's a real huge boost for the Bitcoin ecosystem in general and for DeFi.
Let's stay on the ETFs for a second. How have the ETFs affected this growing Bitcoin DeFi space? So, I mean, I think, the number of people I know who weren't comfortable, they're not involved in the space, they're not comfortable with the idea of self-custody, or even when it's institutions who are unable to invest in Bitcoin due to restrictions. This does change everything. And I think as the regulations follow, that's when you do have more clarity and more insight into the underlying issue, the actual Bitcoin. And then people will be more comfortable about moving to DeFi. The regulation improves, and then you'll see more institutions being able to do DeFi or BlockFi. So I think, once the flow of money dictates everything. And once that institutional money starts flowing in, which it has been, and it starts moving into the underlying areas, that's going to be huge.
Well, just to build on that, I think just the awareness, the fact that the banks are out calling and promoting the Bitcoin ETFs, right, raises the awareness. People want to dip their toe into it to get exposure through an ETF. Fantastic, right? It's driving up the price, it's driving up the volumes. It will take some of the volatility out of the market, which will make it of greater interest now to say, how do I go from an ETF to owning an actual Bitcoin? And then what can I do with it myself? Who can I partner with to manage that asset and be able to build on it from there?
I think the Bitcoin ETF, agreed with awareness. It's tip of the iceberg in terms of the user journey, right? It's if people are, and it's bringing in more speculators and hodlers, right? Which is really the core use case currently for Bitcoin. Across the board, most people are just hodling and betting on sort of the long-term trajectory of it, right? So I think having that exposure, more people coming in with regularly accessible products like the Bitcoin ETF, super easy to access for the mainstream user. And then they start their journey from there, right? Then they get more curious about Bitcoin. Well, what else can I do with it? What else can I? And then, at this, you sort of bring them along. And, the key thing is being there in the funnel to educate that user and making sure that, okay, hey, there's enough materials here for them to get understanding of ultimately the importance of sort of these key components of what Bitcoin's about. Not your keys, not your coin, freedom of assets and control and of money around the world, right? So that to me is like this sort of like top of the funnel experience that is a driver, ultimately benefits Bitcoin builders like ourselves here.
Brian, so as we sort of start winding down, I'd love to learn more about this Bitcoin renaissance, maybe a bit of a history and what the last 2 years have looked like.
Yeah, I mean, I think it started with the Bitcoin NFTs. That was sort of the ordinals and really it was like sort of the CryptoKitties moment for Ethereum. happened with Bitcoin more recently, right? And I think things have come full circle in the last, especially last few years. So Ethereum, then Solana, right? It's jumped from ecosystem to ecosystem, and now I'm seeing this full kind of boomerang back to Bitcoin, especially on the developer and builder side, which I think is the most critical, right? Because those are the ones, those types of folks are the ones that are really unlocking these use cases for us, right? I think that's really exciting. And then you have, obviously, the capital is following that. So there's this sort of robust ecosystem that's rapidly evolving. And then, off the back of that, we had the Bitcoin ETF. And now there's about, I think I counted like 110 Bitcoin L2s that are supposed to be launching in the next 6 to 12 months. So that's going to make things pretty exciting. Many of them are proof-of-stake chains using Bitcoin, which actually ultimately is good for the underlying Bitcoin asset because that takes more Bitcoin supply out of the market, ultimately driving the price up, which I think is great for hodlers such as ourselves here. And then you have the Bitcoin app and Bitcoin Fi ecosystem that's really starting to evolve on chain. So it's going to be a very interesting, I'm looking forward to kind of the next 18 months and seeing how this evolves. And I think we're in kind of like inning 3 right now in this Bitcoin renaissance.
Would you define it as sort of Ethereum culture being ported over into Bitcoin, or is it its own thing entirely? How do you see it?
Well, I think one of the groups, we all kind of know the term maxis. We prefer to call them the Bitcoin Stoics, which I myself to consider. And I think there's a large intersection, whether or not people admit it. They're trying out things in Ethereum and Solana, right, and Cosmos and other ecosystems. So there's a large swath of users there, if you think about sort of like from a Venn diagram perspective. But ultimately, I think it's something like 14 of the total supply of 14 out of the 21 hasn't moved in the last 2+ years. So really, I think that if the way this really adopts and kind of drives tailwinds for that's sort of the next wave is bringing in the hodlers and ultimately convincing them that, hey, this is the next wave of Bitcoin. And it's good for miners as well, by the way. As the halvenings continue, right, it gets more competitive. And I was at a miner event earlier this year, and many of them are talking about expanding into AI and data compute, right? So let's not forget these are public companies at the end of the day, many miners, right, and they're looking for revenue streams, right, and they got to report to shareholders as well. So this sort of new next iteration of Bitcoin and what Bitcoin Fi and Bitcoin L2s is something that we're super excited about because it's creating this full stack economy all built around the most pristine asset in the world, which is Bitcoin.
I think the other element to take into account really comes from outside the space, and that is actually the macroeconomic environment. We've had inflation that we haven't seen for decades recently. We're seeing debt absolutely explode. And I think a lot of people that didn't look at the space before are looking at that situation, seeing the general debasement of fiat currencies and thinking, well, how can I have a real store of value? So that brings a lot more eyes on the space that perhaps ignored it for many, many years. When I first bought crypto back in 2013, I was sitting on an FX trading desk in London. My colleagues all laughed at me. Now, I'm on a trading floor in New York. I think just about every single one of my colleagues has some Bitcoin. And certainly over the last couple of years, that's increased. And I think a lot of that is the inflation element. It is the build-up in debt. Bitcoin is protection against that. And I think that brings a lot more eyes into the space from outside.
People are waking up.
Yeah, and the more it gets viewed as a really sound store of value, we'll get more people to come in. And I think, especially when you think about the number of transactions that the Bitcoin network can process in a year is fixed, right? So if you think about every one of those transactional opportunities, it will become fascinating in terms of how you have an asset that allows for that exchange of value when you want it. And so Lightning Network provides some faster transactions and greater flexibility. But in terms of the core chain, it will really help that store of value as it goes forward. So if you are a hodler, right, you want to sort of then leverage it. How do you do that? And how do you sort of stay long on it but have some of the flexibility of the wealth that you're creating?
Definitely. All right, we have about 3 minutes, so let's get into closing thoughts. Brian, you want to start us off?
Yeah, sure. Well, I'll just kind of comment, I think as I mentioned, with Bitcoin L2s and sort of these novel next iterations of Bitcoin staking, that sort of thing, that's something that we're definitely watching and building here firsthand at Thesis. So if you're interested in these concepts or learning more, check out thesis.co or mezzo.org. I got a couple hats I'm wearing here today. But we have a Bitcoin stack that we're rolling out iteratively here with lots to come in the next few weeks. So stay tuned there.
And from Salt perspective, would love to engage with people, hear what you're thinking about how do you manage your assets. We do have a Mt. Gox inspired promotional offer to help people think about leveraging your assets to protect the price for all of us. So we have a 0% offer for the rest of the year, really just to try it out. We really want people to try out the products and build trust and use the tools. I think it's been touched on, right, in terms of that renaissance. We all have to get comfortable with the tools, the companies we're interacting with, but most importantly, get comfortable with the asset, getting comfortable with Bitcoin itself in terms of how it fluctuates and how it sort of, you can leverage it in different ways.
So I suppose I'll end by saying, when we're talking about TradFi to DeFi, look for the traditional banking system in very developed markets to adopt these things in a very gradual fashion. But it's all about regulation. Now, if we can get regulation to speed up, there'll be much faster adoption. And then, of course, when it comes to DeFi in areas where traditional banking isn't so deep and isn't so involved, we can see a much more rapid approach. But it's really all down to education and regulation.
Amazing. Well, we got a minute left. Let's have some fun. What about some price predictions for 2025?
All-time highs coming in about an hour and a half here.
Anything on your end?
I'm gonna stay away from that.
Smart man. Smart man.
No, I completely agree with that. And what I will say is if we don't break six figures next year, I'd be absolutely shocked.
Bullish. Okay, great. Well, thank you very much.
Thank you.
Thanks, everyone.